All right, yes, perfect. So in the previous video, we went over again that delirium trading plan, which is built on the foundation of that filtering process trading plan ID. Now, right now we're going over the opposite, over a flow trading plan, which is built on the flow trading plan foundation. Now, the trading plan is called flow. And in flow, it is very important to understand the difference between that filtering process, right? How does it actually differ? Well, here you are making more use of timeframes. You're making more use of paying attention to detail as well, which in the filtering process, of course, you pay attention to detail, but here you're paying even more so attention to detail. Now, in the flow trading plan as well, we only focus on one instrument, of course. Then what you're seeing on the left side of my screen and on your screen, then we are seeing a notion. This notion is, again, link is above this video to the notion. And the notion looks pretty similar, right? Looks pretty much the same, I would argue. And that is correct. There's a few changes that we made. Again, things don't need to be any more complicated than they already are. The foundational levels already lead us to overall a trading plan. So right here, since we're already incorporating quite difficult concepts, we could argue, quite advanced concepts right there, we need to pay attention to those details, then a full trading plan with full checklists, again, doesn't make any sense, can only be detrimental. So that's very important to understand as well. Now, if we take a look at psychology again, psychology in every trading plan. So if you want to create your own trading plan, then of course, feel free to do so. But if you are creating a trading plan, psychology will always stay the same. So are you in a good state of mind and reflect? Always stays the same in every trading plan. For our analyst phase, top-down analysis, foundational levels, again, that draw on liquidity, which is our bias, then the narrative, and that context. Then the second one we have, this is a little bit different because now we are looking at how are we actually delivering towards higher time frame PD rates. So the question you ask yourself in the analyst phase in flow trading plan is a little bit different from your delirium trading plan. Where delirium, I would ask myself, well, if we are going higher, where are we going higher from? Which is still a question we would ask ourselves in a flow trading plan. But in a flow trading plan, the question first arises, all right, if we are going higher on the higher time frame, where are we actually going higher from? Then how can we actually deliver there? So how are we delivering towards the higher time frame PD rates? That is our main focus. That is constantly what we are busy with in a flow trading plan. That is, again, the way I view that is if we are going higher, where are we going higher from? Is a really zoomed out question. It's really from a higher time frame perspective, where how are we delivering towards higher time frame PD rates is really a lower time frame perspective. And that is our goal in a flow trading plan. Then in the execution, we see simply the same entry and risk management, because again, that does not really change. Only the entry timeframes, etc., that does change, of course. Then if we go in, again, time always needs to agree. So in that case, I refer to the higher time frame time and the lower time frame time that we went over in this enrollment month as well. So that is quite important to understand as well for the indices and the difference between Forex, etc. Quite important to understand. Then for our psychology, are you in a good state of mind? Nothing changes here. So if you've watched the delirium trading plan, it's the exact same. Is there something that happened yesterday that you need to be aware of? Are you feeling ill? Now, since I assume, and it's also made that way that you can't move on before you've watched the previous video, I assume we've already gone over that and you already know what I'm talking about right there. So I'm not going to keep repeating myself to make it a little bit more time efficient as well. Then in the analyst phase right there, we have top-down analysis. Our top-down analysis here is without the fourth step that we saw in the delirium trading plan, is the 1, 2, 3 is the exact same. So our bias, direction, mainly told through fair value gaps. Narrative, how are we getting there? Context. That is pretty much the same, but the next step changes right there, because this is how are we delivering towards those higher time frame PD rates, which is our guides. Our guides is the 4 hour, 1 hour, and the 15 minutes. So those are our guides. Those are also the main PD rates that we are looking to trade off of. So if we are looking for any entries, we are mainly looking at 4 hour, 1 hour, and 15 minute PD rates to then go into the lower time frame for our entry pattern time frame. How are those time frames combined? That's the next step. So 4 hour, 1 hour, 50 minutes, they are our guides. That's exactly what we're going to go over. They will guide us to the next higher time frame PDRA. How do they guide us? We mark out the verify gaps that are being created and should be created. What does that look like? Also what we are going to go over. Now, where are the verify gaps pointing towards? Also an extremely important thing to understand, because the verify gaps are pointing towards a site. And what do I mean the verify gaps are pointing towards site? Well, if we take a quick look at the chart, then we can see right here, overall, we only had bullish verify gaps. Off of previous bullish verify gaps, we created new bullish verify gaps. We never got a bearish verify gap here on the daily time frame, which means the verify gaps are pointing towards which side? Towards a bullish side, towards the upside right there. So that simply means if we had a premium array in the form of a verify gap higher right there, then the verify gaps are pointing towards that higher time frame premium array. Again, all examples that we are also going to go over. So if we move on to the execution phase, then here we have the entries. Now the entries change a little bit. For a flow trading plan, I am assuming that you want to be a lower time frame trader, that you want to mainly focus on intraday and scalping. If you want to trade off the 4 hour and the 1 hour in a flow trading plan, which can be done, but overall I do not really see the benefit of that, to be honest. And the reason for that is because I think you would be better off trading a filtering process if that was the case. A 1 hour entry, I could still see why you might do that if you are really invested into an instrument, and let's say you have a busy week, and in that busy week you still want to look at trade, but you want to take 1 hour entries. I could still see that happen. So in that case, if that is the case, eventually you can also look for a 1 hour entry. But I would advise, if you are a flow trader, stick to these guidelines right here. Now, for a monthly PDRA, let's say we are coming off of a monthly verify gap and we create a 4 hour ST. We do not want to use the delirium. So we do not want to go into the 4 hour ST, then the 4 hour RE as well, enter off of that. No, what I want to do as a flow trader is I want to go into that 4 hour ST, ideally the verify gap that was created off that ST. And inside that verify gap, I want to look at a 5-minute ST plus RE again. So I want to use that extra confirmation. And that is how you would use and get creative with the time frames in a flow trading plan. So here on the weekly PDRA, what do? We now have a 1 hour ST right there of a weekly PDRA. Do we want to wait for that RE on the 1 hour to then look to get involved on the 1 hour? No. We want to wait for that 1 hour ST, be traded back into, to then go into the 1 minute to look for our 1 minute ST plus RE. So again, you can see here, really quick going over it, that we are incorporating a lot more details, a lot more rules. And this is completely fine because, again, we understand that our mind is not busy with scouting the highest probability conditions on 1,000 pairs and 1,000 instruments. No, we are focused on one instrument right there. We already know where that instrument was 2 weeks ago on a Wednesday at 3 a.m. London Open. We already know where it was at Equities Open last Friday. So that is all things that are ingrained into our mind, which allows us to then use also more rules, because that energy is not wasted, not really wasted of course, but it's not wasted and it's not directed towards understanding all those different pairs, all those different instruments, which allows us to have these different rules right here. So daily PDRA would just for me be 15-minute ST plus RE. I like to keep that one simple. Daily PDRA, 15-minute ST plus RE. Same as your delirium. Then for the 4-hour PDRA, we have the 5-minute ST plus RE, or if you prefer that, the 15-minute ST. That is again where you need to make that choice. 1-hour PDRA, 1-minute ST plus RE, 5-minute ST. Again, which one do you prefer? And when I say you need to make that choice is made before you even dive into the charts. So right now, I would love for you to write down already. Are you going to master 1-hour PDRA, 1-minute ST plus RE? Or are you going to look to master 1-hour PDRA, 5-minute ST? Pick one of them. That's what I would do first. And then eventually we can look to add on to that potentially. But first, pick one of them. All right. Then the last one, 15-minute PD array, 1 minute ST, and in brackets plus re. There are scenarios where you could require another re, a 1 minute ST plus re, because again, the ST, the 1 minute ST is the minimum that we have right there. The more confirmation we get, the better. That is exactly what we are looking at for our overall entries. These are the timeframes that we are going to be using. Then for our risk management, risk percentage depending on your account. That is again what we have already gone over. So it's very important in the previous video that you do, even if you are not filtering process plan trader and you're not planning to trade Delirium, please watch that video because that is where we go over the risk percentage depending on your account. It's very futile, I do believe, if we go over that again right now. Then stop loss is the lot in context, also what we've gone over, but of course, here it might be a little bit more difficult because we need to change all those timeframes. So also what we're going to go over. Take profit, a 1 to 2 RR. For a flow trading plan, I would argue that a 1 to 2 RR is the minimum. It's the minimum. I think for a flow trading plan, and I like to believe for a flow trading plan, we can target a little bit more than a 1 to 2 RR. And the reason that is because, again, we want to capitalize on those high probability moves, on those nice moves. So if you first off start off with a 1 to 2 RR, maybe after 3 months, give it 3 months and look at your data. Hey, I took maybe in those 3 months, I took 20 trades, let's say 20 trades. And in those 20 trades right there, I see that I have an average RR of 3. So the average RR that my winning trades run to is 3 RR. All right, then let's look to target a little bit more next time. Maybe 2.5 RR, or maybe eventually 3 RR. That is what we can do, again, according to our data, which is also one of the next videos where how can we actually improve according to our data. Then break even. Once there is no reason to return, same exact thing, of course, with the different time frames, becomes a little bit more details as well. Then psychology, reflecting, stop trading and see what happened. How do you feel after this trade? Did you stick to the plan? All things that we have already gone over as well. So what does the flow trading plan look like in an actual chart? Again, first of all, psychology, are you in a good state of mind? Is there something that happened yesterday that you need to be aware of? Are you feeling ill? All right, I'm just going to tell you how I'm currently feeling. How am I currently feeling? Well, I'm a bit stressed, to be honest. Stressed because I'm currently moving to a new place. And am I feeling ill though? No, definitely not. Am I a little bit tired? Well, no, not really. I'm full of energy, but a little bit stressed, we could argue. And I'm moving to a new place. Stop. Stop. If I was in that situation, which I currently am actually, which is quite funny, of course, I would stop right there. I am not trading. A little bit stressed. Did I hear the word stress? Stressed? Did you say you were stressed? All right, we are not going to trade today. We are going to wait. So let's take a different scenario, which doesn't apply to me currently. Is there something that happened yesterday that you need to be aware of? Are you feeling ill? I'm feeling great. At the time of my life yesterday, I'm not feeling overconfident or anything. I have everything under control. Perfect. Feeling great. We can move on. Nice. Analyst, how do we go about our top-down analysis right now? We have bias, direction, narrative, how are we getting there, and context. So I want to compare this to the filtering process trading plan to truly show you the difference as well. So here and there, I'm going to mention what would be the difference. But again, I want to, of course, well, mainly focus on flow trading plan, but I'm going to tell you the difference on what you would do in a filtering process trading plan to tell you and to see that visually that difference. Now, right here, we are going to mark out the closest PD arrays on every single time frame, which is not necessarily something you would do in a Delirium trading plan. A Delirium trading plan, you're just very simply said, all right, we have been bullish. If we are going higher, where are we going higher from? That's simply said in a filtering process trading plan, what you would do. Where for a flow trading plan, you are now seeing, well, we are not only looking at if we are going higher, where are we going higher from? How can we actually trade towards that? So that is where the difference is. Now, this currently closest PD array If this monthly candle closes right there, then we have new PD rates, of course, in the form of that previous month's high and previous month's low. We have fair value gap potentially as well. Once this fair value gap is confirmed right there, which of course it likely will, we have those highs as well. All right, perfect. Let's just mark the highs for the sake of it right there. And then let's go into the weekly time frame. So on the weekly time frame, the first thing I actually notice is that we are in the midst of creating a fair value gap right there. See if we have something to the left. No, it's the same swing high. We have this weekly fair value gap sitting right there, but already above it. Perfect. Then we are in the midst of creating a weekly fair value gap. Now, the discount array moves higher a little bit in the form of that order block, which we are also. Then that becomes an order block if this fair value gap is confirmed, which very likely is confirmed. We also had this previous week high right there. All right, so that is quite interesting, right? We had the previous week high. We had this order block right there, which means I can already remove the monthly as in that high right there. I'll still keep the draw on liquidity, the overall draw on liquidity, I'll still keep it in mind right there. But we can currently also look to remove it. Perfect. Previous week high, order block right there. And we are, that's very important because we are potentially creating a fair value gap right there. All right, on the daily time frame, what are we doing? On the daily time frame, the previous week high is also a swing high. Then on the daily time frame, we have the previous day high, of course, and a previous day low. I meant this swing high is a previous week low. A previous week high, sorry. I'm not sure if I mentioned the previous day high or what I said. So that is a previous week high, and that is, of course, a swing high on the daily time frame right there. Perfect. Then we have this swing low right now, and we have this swing high. But I want to take it a little bit back, where at this moment in time, what did we have right there? At this moment in time, what did we have? Here we had the previous day high sitting right there. That's the closest premium array to current price action. After that, we have this low as well sitting right there. Perfect. Then this one, the previous week high, can be nice as an extra confluence, but we can look to remove it overall. So let's remove that. This is now, of course, irrelevant. We do have this daily fair value gap, even though it's not the closest. I still like to mark it out. I'm just scouting. I hope you can see that. I'm just simply scouting, seeing, all right, what do we have in the form of PD rates that are close by, that are close to us? Because those are the ones we can potentially trade towards. So we have this daily fair value gap sitting right there as well. Then we have the previous day high, previous day low, which is of course always going to be the closest PD rates. So if to avoid that, I also want to look a little bit at the daily fair value gaps, because the daily fair value gaps and fair value gaps in general, daily, weekly, monthly, those are the ones that we want to pay attention to a lot. Seeing which fair value gaps can we trade back into before moving higher, for example. Where in the Delirium trading plan, we would say we have this daily fair value gap, so potentially we can continue higher. In the Delirium trading plan as well, we would say, so we have this weekly fair value gap right there in the making, so potentially we can continue higher off of that right now. That is great to know, because understanding that Delirium trading plan allows you to understand, allows you to be a great higher time frame trader, meaning that you understand really well what the higher time frame is willing to do. Where a flow trading plan is now also really beneficial if you want to trade a Delirium trading plan, because you are now understanding as well what the lower time frame wants to do. So eventually we want to have best of both worlds, where if you're a flow trader, I do believe that if you dive into a flow trading plan, you are going to be a great lower time frame trader. Where in a Delirium trading plan, you are going to know very well where the higher time frame is going to go. In a flow trading plan, if you are focused on lower time frame too much, then the higher time frame is going to kill you. It's going to murder you. So we want to know as a flow trader, how can we improve on that higher time frame? By understanding Delirium. How can we improve in Delirium? By understanding a flow trading plan. So again, you are going to pick one trading plan, but still both trading plan videos and studying them both is very important, because they both go hand in hand with each other. Flow trading plan's his weakness, you could call it, is Delirium's strong side. Delirium's weakness is the flow trading plan's strong side. So So they are the perfect team. And when you mix them together, they make the perfect understanding of overall the market. So whichever plan you want to trade, it's very beneficial to understand both trading plans, to understand the lower time frame, to understand the filtering process trading plan. So how would you approach that, what I've just said? And before we dive further into the chart, focus on one trading plan, but understand where your current weakness is. And with that, I would say, all right, can you also make a case study for the other trading plan? You don't necessarily need to trade it, but can you make a case study for it? Then eventually, where my overall understanding comes from is not because I traded only flow trading plan. It's not because I only traded a filtering process trading plan. No, I traded both. So I understand really well what the higher time frame and the lower time frame wants to do because I traded both. So I have a great understanding of both. I have a great understanding of the mix, the variance in that, where you will often see great traders. And again, I'm not calling myself a great trader or anything, but you will often see that the more advanced traders are, the more experienced traders are, the less they make use of certain trading plans. And the reason for that is because in the beginning, you need guidelines. And when you have guidelines for one trading plan and you know it like the back of your hand, then eventually you can move on to a next trading plan because you lose interest in that certain trading plan. Your personal preference changes, where, for example, you now want to switch from delirium to a flow trading plan. Then eventually what happens? That flow trading plan that you now stop trading, you don't stop trading that all of a sudden, as in you don't lose the lessons you've learned in that flow trading plan. That gets taken with you to the delirium trading plan. Meaning that if you now trade a delirium trading plan after trading a flow trading plan, which is my path exactly, then the delirium trading plan might be a little bit more difficult at first, but those skills you accumulated in that flow trading plan get combined slowly with the delirium trading plan, where you almost combine two trading plans into one trading plan. Of course, understanding those pairs, how much focus do you have, how much energy do you have, how much brain points do you have to spend, that's very important on which pair you actually need to trade. So that is where the differences are right there. But your experience has gone up an insane amount. So your experience, your intuition, which increase your overall win rate, which increase your overall RR, has gone up an insane amount. So that is eventually when people also get to an understanding where they don't even need a trading plan anymore. And that is a crazy understanding and a really advanced understanding where it seems like traders sometimes don't have a trading plan, but they have traded their different trading plans so much that they understand it so good that they have combined all that knowledge into one, where it seems like they're not trading or they're trading without a trading plan. But again, like I want to mention, is that to give you the conclusion, is that everything they do is already inside one of those trading plans that they now have combined into their own mind. And that is exactly the state that we eventually want to be in. So flow trading plan, delirium trading plan, they're both really beneficial, especially if you want to trade one of them, then the other one is going to be beneficial for you. Here on the weekly time frame, on YM right there, we are seeing that Verweij gap being created. So a delirium trader right there would say, hey, let's wait. Where the flow trader would be, all right, well, why do you say that? Well, because I am seeing, as a delirium trader, I am seeing right there that we could trade into that weekly Verweij gap next week, especially with a formation like that. Where a flow trader would now be, hey, thank you for the advice, because I can now look to trade into that weekly Verweij gap potentially next week. Perfect. So how can we do that? Where the delirium trader would now stall, where he would be like, all right, flow trader, teach me, how can we trade into that weekly Verweij gap? So how can we trade into that weekly Verweij gap, and how can we trade into that daily Verweij gap right there that we are seeing? Well, first of all, it's understanding that right there we are creating that daily Verweij gap higher. So a delirium trader, how would he approach it? Or she, of course. Well, he or she would say, well, let's wait for this daily Verweij gap to potentially be created to continue higher off of that. Where a flow trader would now say, all right, thank you for the tip again. And what do? We mark out this high right there, that high. Why do we do that? Because that high right there allows us to now identify if there is actually a daily fair value gap being created. So we have that previous day high, which is a premium array, and we have this area right there, where if this area gets traded back into, then what happens? We are now reaching for that low, and we are now reaching for that daily fair value gap right there. So this is where the understanding of a flow trader as well comes in. You pay more attention to those details, which, if you understand this as a delirium trader, creates what? Creates unusual context right there to then trade into the daily fair value gap. So what do we do right here? Well, here we now move on to the next part, because now we've gone over the daily, weekly, and monthly. And we move on in the analyst phase to our guides. The 4-hour, the 1-hour, and the 15-minute. Mark out the fair value gaps that are being created and should be created. That's something we've done on the daily fair value gap. That daily fair value gap should be created right there. So we mark out that high because that is where the daily fair value gap should be created, right? So let's go into the 4-hour. Into the 4-hour right there, we have these 4-hour fair value gaps. It's the most recent one. So, all right, perfect, nice. And then on the 1-hour, do we have a daily fair value gap? We have, a 1-hour fair value gap, of course. 1-hour fair value gap sitting right there. All right, on the 15 minutes, do we have any fair value gaps? Not really. We don't have any fair value gap higher, actually. Quite interesting. Perfect. So on the 1-hour right there, we have that fair value gap and that fair value gap. All right, now what do? We now simply wait. Where are the fair value gaps pointing towards? So we wait for that kill zone. We wait for that equities open. And then we look to do something. So we came into that 1-hour fair value gap right there. Very sluggish price action. Did create a new 1-hour fair value gap off of that though, right there. Then once we came into that 1-hour fair value gap, we can now delete this one. Because we've already been traded into right there, we can delete it. This 1-hour fair value gap made us create the push above the previous day high right there. So once we came above that previous day high sitting right there, well, what happened? We did not create a new 1-hour fair value gap right there. So not creating that new 1-hour fair value gap leads us to already be a little bit suspicious. We don't do anything because it's still ahead of equities open, but it's quite suspicious, right? It's quite interesting because why don't we create a new 1-hour fair value gap? And we also have that wick. That wick seems like it's respecting the previous day high. What do we know as a wick? A wick is fair value gaps on what? It's a fair value gap on the lower time frame. So let's see on the 15 minute. We create an ST right there on the 15 minute. All right, let's actually mark out this 15 minute ST right there. Because that 15 minute ST is now going to be beneficial to us. Let's see if we want to continue order flow lower on the 15 minute ahead of equities open. Let's see. What is the 1-hour willing to do? 1-hour, we have some shenanigans right there. Some weird price action overall. Ahead of equities open. All right, not too crazy because we're not looking to get involved just yet. But what am I doing here? I'm trying to create a bias, narrative, and a boundary, which in a filtering process trading plan in Delirium, we have it very fast. Because we can go into the daily and we see bias, narrative, boundary. Perfect, we have everything. Where here, it takes a little bit more work. It takes a little bit more work right there to now find our actual bias. Find our narrative. We have potential PD rays that we can look to trade into, which create draw liquidity for our bias. But there's nothing confirmed yet on our guides. Our guides have not told us anything on where we can potentially go. So let's wait. Right there, all right, we get that fair value gap, or we get a, not fair value gap, we get a move lower right there. Let's see, what did that look like on the 15-minute time frame? All right, on the 15-minute time frame, not too crazy, but we do create this 15-minute fair value gap right there. Quite interesting, actually. We continue lower off of that. All right, well, ahead of London, we can pretty confidently say, I would say that we are targeting that 4-hour value gap. So if this was equities open right there, what would you do? You would look for your usual context on the 15-minute time frame right there to look for now what? Look to trade into that 4-hour value gap sitting right there. That is what you do. You are constantly playing ping pong with price action. All right, what are we doing right there? Do we want to trade into that 4-hour value gap? Then we first need signs to actually confirm that we want to trade into that, which we got right there. Then this 15-minute value gap sitting right there is the perfect confirmation. Now, I need to clear something up here. Because do you want to wait constantly for order flow to be confirmed here? No. This is where you can cheat it a little bit. You're still using order flow, don't get me wrong. But I'm also going to show you an example where very early on, you don't need that order flow to necessarily be confirmed already. If you get the right signs, etc., then just look to get involved right there. So this, if we had equities open and time was agreeing, which is currently not, then right there, that could have been a great trade. So let's see, what does the story want to tell us right now? Because we've reached a drawn liquidity in the form of that 4-hour fair gap. All right, let's see, we are sweeping that low. We are creating a bullish fair gap right there on the 15-minute as well. All right, perfect, very interesting. Let's see what we want to do. We are respecting this 1-hour fair gap right there. So let's actually take it a little bit slower to see 1-hour fair gap right there. 4-hour fair gap sitting right there. 15-minute fair gap just got disrespected right there because we pushed into the 1. That 1-hour fair gap pushed lower right now, creating 15-minute fair gaps right there. So you would say those 15-minute fair gaps could hold. But what is the 1 hour doing? The 1 hour doing is now, or the 1 hour is now sweeping that low right there, not creating an expansion phase of the fair gap lower, of the new fair gap that was potentially being created. So what are we doing again? We are marking out the fair gaps that are being created and that should be created. So here we have 1 hour fair gap. Which fair gap should be created? This down candle should be the expansion, so should be having a body like this to then create that 1 hour fair gap lower. Did not do it. Overall understanding as well, 4 hour fair gap lower, 4 hour fair gap right there, 1 hour swing low right there, which we are sweeping, we are respecting by the looks of it both. So can we expect that 15-minute fair gap right there to hold? Well, that would require a miracle. If you have both the 1 hour and the 4 hour saying, well, we might be bullish right there, might target a little bit higher, and the 15-minute continuing low right there, it's not something I would expect. And that is, again, very simply said, those arguments that we're dealing with, right? So eventually, what do? We continue higher off of that. We create this 15-minute fair value gap sitting right there as well. Well, where are the fair value gaps in that moment in time pointing towards? Towards, again, new highs right there. Which overall, if you were a delirium trader, what would you have seen? You would have seen a 4-hour fair gap right there, which we simply could have continued higher off of. Which create that new high right there, that swing high, those swing highs, which we can then look to target. So right there, if we now go back to reading the fair value gaps, and right there, I want to make sure that you fully understand this. Then on the 4-hour time frame, what are we doing on the 4-hour time frame? All right, well, what fair value gap is being created? This fair value gap, what fair value gap should be created right now? This fair value gap right there, we overturned right there a 4-hour bearish fair value gap, which to me would indicate right there that we're still quite bullish. All right, on the 1 hour, what are we doing right here? On the 1 hour, we have a pretty aggressive move low right there. Now, we do have this 1 hour fair value gap sitting right there, which we can also look to still continue higher off of. What do we have here on the 15-minute though? On the 15-minute, we just came above those highs, those context highs on the 4-hour. We have this 15-minute fair value gap sitting right there. That 15-minute fair value gap and the fair value gap, it should have been created. Fair value gap that is created and should be created, did not get created, and created a bearish fair value gap sitting right there. This 15-minute fair value gap right there, that small little move right there, targeting, what is the next target? That 1 hour fair value gap. Why? Because if we are continuing higher, then where are we continuing higher off of right there? Well, we're at least targeting the 1 hour fair value gap. What happens after that? We'll see. But we know that this move, that 15-minute fair value gap, will likely be responsible to push price into that 1 hour fair value gap right there. Perfect. On the 1 minute, what did we see? Do we have something to work with? 1 minute ST right there. All right. Could have been an entry, covering the highs. And then right there, we have the 1 hour fair value gap. It's a 1.12 in RR. Is that worth it? Well, I would say overall, no. when does it become worth it? If we now go break even already right there. At least trill our stop loss. So let's see if we are allowed or if we can go break even right there. Well, we do not have a fair value gap overlapping with that entry right there. All right, we can potentially look to go break even. Perfect. Right there, break even. Target that 1 to 2. Target potentially lower. Because what is the target after that 1 hour fair value gap? We have the next 1 hour fair value gap sitting right there. Did we already create a 4 hour fair value gap higher? No, because we failed to create that 4 hour fair value gap higher. Once we fail to create that 4 hour fair value gap higher right there, then what is the next target? This 4 hour swing low. What is the PD ray below that? This 4 hour fair value gap sitting right there. Nice target. Then after that, we have this line. Remember what this line is? It's the prevention of a daily fair value gap being created right there. Because we should have been back above that. Which allows us, what is the next target? This low. Then what is the next target? This daily fair value gap sitting right there. So what I'm trying to tell you right there is that it's a dominoes effect. Where on the 15 minute right there, we start to disrespect this 1 hour fair value gap. All right. Perfect. We might continue lower overall, because if we are continuing higher, we should continue higher off the 1 hour fair value gap. If we were to not continue higher off the 1 hour fair value gap, then we refer to the 4 hour to see if the 4 hour is telling us, does it create a 4 hour fair value gap higher? No, it does not. So then we create that unusual context, which you would know as a delirium trader right there, to target this low. Then after that, the next PD ray, essentially the next discount rate, is that 4 hour fair value gap. Then after that, it's this high right there that we're seeing, which is on a daily time frame, which creates unusual context again. So right there is the previous day low. Then after that, which is the next discount rate, the daily fair value gap. So it's that dominoes effect where if one falls right there, then everything falls. The whole kingdom falls right there. All the dominoes flip over. Boom, 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 boom. So this is what I meant with, well, that 1 to 2 RR in our entry and our risk management. The 1 to 2 RR is great. And again, that is what we want to initially target. But after that, we can definitely look for a little bit more as well. Because if we take over that and we're just simply break even right there, then that is the next target. And then eventually, once we have this sting into that 15-minute fair value gap right there, then right there, already understanding that the 1 hour is just showing and the 4 hours just showing those bearish signs. We have even confirmed order flow on the 15-minute right there, potentially going lower. An ST right there. So if we can get a new entry potentially, well, if you got involved right there or even right there, potentially, let's just say this one, you might have gotten involved at that moment in time if you were to execute on that fair value gap. But if we keep it mechanical, 1 minute ST of 15-minute PD ray right there, perfect. Cover the bodies. After that, a new 1 to 2 opportunity right there. And this is what I mean with, in the previous Delirium video, previous trading plan, I mentioned that, or I believe I mentioned it in the foundation. Not sure which video it actually was, but I mentioned in a flow trading plan, if you want, and eventually when your experience stacks up, etc., and you can allow yourself to take 2 trades a day in high probability conditions, you need to do that. You need to start doing that. Where in a filtering process, it would also, you want to start doing that eventually, but in a flow trading plan, you simply don't have the opportunity to go look at different high probability conditions that we might have in different markets. Where if we have high probability conditions in one market in a flow trading plan right there, that's a blessing. That is something we need to take advantage of. It's very important. So first target is 1 hour fair value gap. Eventually, when we are in that 1 hour fair value gap, we can already tell really quickly that if we want to continue higher based on fair value as well, we should have continued higher off that 1 hour fair value gap. So this 1 hour fair value gap is pretty irrelevant, which then also reaches the 4 hour right there. So the next target could even be these lows sitting right there. And this is how the dominoes fall right there, because they keep going right there, continuing lower. And that is, well, you could call it the domino effect. where one of them falls, and we already know it quite early. Well, we don't know exactly what's going on, but we can get a great indication right there through our logic, through that repetition, etc. So that price action and every day's price action is really definable if you make those case studies, if you understand what's going on. And then you just tape read first. Tape read in real life. Tape read in live price action. Just seeing, what are we doing? Where are the flags being created and where should they be created? And then after that, you are going to be ready for a live environment. In a live environment, you are going to take hits. You're going to take losses. You're going to take losses again. That's completely normal. Accept those losses. It's nothing to be ashamed of. We need those losses because they teach us. Usually in the beginning, they teach us things. They teach us where we can pay attention to. So for example, if we're too early to entry, then that loss that we take in that too early, that is a lesson. We need to make those mistakes right there to actually improve. So it's very important to understand that we need to make mistakes. We need to make mistakes to improve. Otherwise, we simply can't improve. That's very important. So this is how you would go over a flow trading plan. And this is the flow trading plan in itself. So understanding that this pays more, we pay more attention to detail. If you follow the steps here, mark out the gaps that are being created and should be created, then overall the story becomes quite clear, becomes quite obvious to see, hey, what are we actually doing? If we want to continue higher, which gaps should actually be created? If you make case studies off of this, and even with different scenarios, different price action, etc., that will benefit you a lot, and you will start seeing this over and over and over again. Which, what we mentioned right there, is also really beneficial for your flow or for your delirium trading plan, understanding this. Which delirium is, of course, really beneficial for your flow trading plan right there. Which, if you see this coming against you, this price action coming against you right there, where a flow trader would take short, a filtering process trading plan, a delirium trader might look at longs. If you understand the flow trading plan as a delirium trader, you would probably have prevented some losses right there if you were to look at longs. So understanding both worlds is also really important. All right, then in the next video, we are also going to touch again, of course, on the next topic, to look to slowly start to end MMP week and get ready for the finishing touch week, which also leads me to the next question. If you have anything that you think we have not touched on really that in depth, or you feel like it's a little bit missing, then I'm always open for the feedback, because again, communication in that wise is the most important part. If you feel like there's something missing or we have not touched on it, then we can touch on it in the finishing touch week as well, where we go over small little topics that, or of course, big topics as well, that you feel like we're missing out a little bit. So feel free to let me know that as well. Very important, that communication. All right, perfect. Thank you.